Welcome to Momentum Monday. Today is December 8th, 2019. It's actually my birthday, so happy birthday to me. Howard is out of the hospital. He's recovering at his home, and hopefully he'll be able to join us next week. So let me share my screen so we can go over some charts. Okay, this is a chart of the Nasdaq 100. Last week we had quite a spike in volatility. As you can see here, the QQQ broke down and tested its even its rising 50-day moving average on news that there might not be a trade deal with China. And then, of course, later in the week, it bounced just as sharply. If you ask me, I really don't think there will be a deal, but as of right now, the market is giving the benefit of the doubt to the optimists. And all indexes are trading near their 52-week high, near their all-time highs when it comes to the large caps. And here's the Russell 2000. After a quick test of the rising 20-day moving average, now it's back near new 52-week highs. So it's hard to argue with that type of action. Deep buyers continue to step in and buy every little pullback. So overall, the tape continues to be quite bullish. Let's go over some of the major sectors. Here's SMH, which is a semiconductor ETF. Also tested, went down almost to its 50-day moving average earlier last week, and now it's back near all-time highs. Some of the interesting setups in the sector, I think NVIDIA is looking very interesting. It's back above its 20-day. So maybe if it has like one more tight range day above it, it can attempt to go back near its year-to-date highs, around 220. TER, which is Teradyne, strong day on Friday, bounced near its 50-day, finished really strong. And I think if they clear that level here around 64.50, it is very likely to also go back near its all-time highs. And then some others, Keysight Technologies. Personally, I would wait to see it close above its 20-day before I get engaged in this one. AMD. It is consolidating above its 20-day. 40 seems to be an important level here. As you can see, 2 days in a row, the stock is having issues around that level. So probably it has entered a stage of sideways consolidation. So for now, I wouldn't chase it here. It needs to set up again. It needs to build a new base. Biotech is undisputedly the current leader in the market. As you can see, every tiny dip is getting bought. There have been so many acquisitions or rumors about potential acquisitions in the space, which are driving the sector. Here's XBI, the other biotech ETF. It is looking extremely strong. Look at those high volume bars and strong weeks. It's under obvious accumulation. One interesting setup in biotech right now that I am watching carefully is Unicure. It had a big volume breakout last Tuesday after one of the other biotechs was acquired for 100% premium. And it has managed to hold this gap, and it's it is acting pretty constructively and setting up for another leg higher. I think this one is right now, it's working on the right side of its new base. So I would not be surprised to see it test its 52-week highs near 80. And let's take a longer term look at this one. So as any other biotech, it's been quite volatile. But currently, this is where the hot action is. It continues to be biotech. And most of those stocks are, of course, quite extended. They will not chase them, but here's one that is not. Gilead Sciences, GILD. As you can see, it's trying to form an interesting base above its 250-day moving average. I think if it clears 67.50, we can see an attempt for a run towards 70. It's a slower mover for sure, but you can still make a lot of money even in a large cap stock. Another sector that I wanted to mention was, let's go over some of the Chinese stocks. So the Chinese market is still a mixed bag. From one side, we have Alibaba at new 52-week high. Last week, it pulled back to its 50-day where it immediately found support. Now it's back near all-time highs. Definitely the leader in that space, while others are like NTES, it's also in an uptrend, and most of the dips towards its rising 20-day moving average continue to get bought. Momo, which is also known as the Tinder of China, is building a new base. I mean, I like how it's setting up on multiple time frame. On Friday, it had a really tight range day, and I think there's a good chance it will try to test 40 in the next week or so. And if it managed to break out above 40, it will attempt to test 50. So trading and investing, it's all about conditional thinking. I mean, if one thing happens, then the likelihood of another thing, of another move becomes more likely. And this is why I say that it, first it needs to get to 40 and then break above 40, so we can talk about the potential move to 50. That's the condition. The condition that if it becomes true, it will just change many market participants' perceptions about that stock, and it will lead them in that direction. Which other sector? So on Friday, we saw really, really strong jobs number. Even though the jobs numbers are a lagging indicator, the market reacted quite favorably. And we saw money pouring back into consumer discretionary stocks, which have been lagging for the most part. Here's this consumer discretionary ETF, XLY. Nothing interesting is going on here. It is just working on a new base. Definitely has been underperforming the S&P 500. You can see it's declining relative strength. But there are some interesting setups within that consumer discretionary space. My personally favorite right now is Starbucks. It managed to find support near its rising 200-day moving average on 3 occasions in the past month, and now it's back above its flattening 50-day moving average. And I think there are good odds that if it can clear that level here, 87, it will go to at least 90 in the next week or two. So 90 is the next big level of potential resistance. And then if it manages to clear 90, then 100 is the next level of importance. Let's take a quick look at the Momentum 50 list. So we have Facebook at #1 this week. We have Nevro, which is a medical equipment stock, which has done really well this year. #2, we mentioned Unicure, that biotech that is working on the right side of its new base. Teradyne, semiconductor. Also Splunk, one of the software names that is acting in a very constructive manner after their earnings gap. You can see here they beat earnings estimates on November 21st. He had a major volume breakout, and the fact that they had a high short interest probably helped a lot for that move here. So they had a big move from 130 to 150, and they've been consolidating through time since then. So it's one of the better looking software stocks, and you cannot really say the same about many other software names. Last week we had quite a few reports, and for the most part the market reactions to those reports was not favorable. We saw quite a few sell-offs in the space. Here's Elastic. It gapped down. It's close to its all-time lows near 60. We had Zscaler, so giving up its earnings gap. We had Zoom, and by the way, all of those names, they did not really report bad earnings. Look at Zoom, for example, 800% earnings growth, 85% sales growth. They 200% earnings surprise. They raised their guidance. So by just looking at the statistics of the number, they had an amazing report, but the market didn't care about it, and there were a lot more sellers than buyers last week. I don't know if it's related to lockup expiration and insiders just selling some of their shares, or it might be related to tax loss harvesting, as many people who bought the stock near the highs are now underwater and they're selling their positions so they could book a loss for the year and decrease the amount that they would owe to IRS. Both of those are valid reasons, but for the most part, they had decent earnings reports. And if tax loss harvesting is the reason we're seeing that sell-off, I would imagine that in January, we will see a major bounce in those beaten down names. So just don't remove them from your watch list. Just keep an eye on them. They continue to grow extremely fast and in an impressive manner. And yes, their valuation is still very high, but that doesn't mean that there won't be periods when the market will forget about the valuation again and we won't see big moves in the space. I think Shopify was a big exception last week in the software space. We saw a significant volatility in the stock. First of all, last Monday, they sold off hard, tested their 50-day, and then they bounced. They had a 60-point range within 3 days, and now it's one of the better looking software stocks. Anything else, I mean, I would stay away. MDB, I think they report earnings tomorrow on Monday after the market close. AYX, it's kind of holding above its 50 and 200-day moving average, and as long that is the case, I would not short them. Now, Twilio is currently still in a downtrend. I mean, I need to see it close above 104, I would say 106, to potentially consider a trade on the long side. I think that'll be all for today. If you have any questions or suggestions, you can leave them in the YouTube comments, or you can just message me on Twitter. I'm at Ivan Hoff, and then the number 2. You can either message me or direct message me or email me, whatever is more convenient to you. Thanks for watching.